If there's not demand at these levels and the Fed has to come in to prop it up, to keep rates from blowing up. But if there isn't demand and you see auctions that haven't failed but have very lackluster demand, and who knows how much the Fed or shadow entities that represent the Fed in the Cayman Islands or whatever are bidding this stuff up, it will just become obvious at some point that that's the debt spiral, rising rates, and more money printing to buy the bonds to keep it down, and it just goes on and on and on and on. We're right there. So that's the point. That's why we're trapped. At some point, there's always a buyer for the debt at some rate, but there doesn't seem to be much appetite at these levels. So you're beginning to see rates start to move into levels that in months past have started to rattle the system, the banking system in particular. But if they do jump in, they've lost all credibility. And, Trump wants the rates lower. But remember, our dollar's lost 9% already. So how do you run a world reserve currency with all of this debt, with rates that are not commensurate with the falling of the dollar and the debt accumulation? No one wants to buy it, let alone the way that we behave with these countries, threatening them with sanctions and tariffs. They're finding alternatives. They truly are finding alternatives, and it's becoming very obvious to me. So yes, that is the playbook, come in and rescue the day. But if they do that, where's the credibility and where is the demand for treasuries when you look at a country that is resolved to never normalizing their balance sheet? And that's why people are saying that Japan's going to do the same thing right now. After all of these years of suppressing rates, the Japanese government owns 52% of the bond market. Well, where's their credibility? As rates go higher in an attempt to normalize their balance sheet and sell those treasuries into the market, they too have the who to problem. Who do they sell them to? Who wants them? Everyone else is gone. And we're beginning to witness a similar pattern here where the big buyers of our treasuries are moving in the other direction. And you take away the carry trade, rocket fuel, where people can borrow money in low priced yen and then convert to dollars and buy Nvidia or Bitcoin or Apple or treasuries at that spread. Now that's disappearing very quickly. The unwinding of the carry trade can be just as viciously bearish as the ability to use the carry trade. So yeah, these are dangerous times for certain. And I think it all is going to be centered around the debt markets, which are far bigger than anything else, far bigger than the Federal Reserve has the ability to contain. And we can see that by them coming in and buying the 3, the 30, or the 3, the 10, and the 30, and the rates are still climbing even with that participation by the Fed. I don't know that they're flush with refined silver. Maybe they are. I mean, I haven't seen that at all, to be honest.
Recycled silver was the question, yeah.
Yeah, I mean, well, I did an interview with Rick the other day, Rick Rule, and he said only 18% of the silver that came to market, or 18% of the 850 million ounces last year that were available came from silver miners, and the rest was from recycling and from byproducts. So there is some recycling. I just don't know how much, and I don't know them to be flush with anything. I can tell you that because of the tariffs, getting non-denominated bars, non-currency denominated bars, I don't even know, what am I trying to say, non-monetary bars, are very difficult. The people importing them don't want to mess with it and risk the tariffs and risk trouble getting them in. So they're the ones that are making the bars. I don't know that to be true, to be honest with you. I had one of the biggest distributors in the world called me and asked me if I had any 100-ounce bars 10 days ago. And these are people that I typically buy from. So I don't know if that's true or not. I wouldn't really doubt that I wouldn't put it past it being true if you read it somewhere, but that's off my radar screen. And I don't know. I'm sorry.
Okay.
If you look at a silver dime prior to 1965, its silver value is over 20 times its face value. So yes, I think it would. I mean, it's a fair point, but I do believe it would, and for its melt value, certainly not for its face value. I mean, you could say the same thing about a silver eagle, a $1 face value or a $50 face value gold eagle. It's the underlying intrinsic value that that truly matters. Maybe more so, though, the dollar and anything around it becomes a pariah, and you have greater demand for other items. I doubt that will happen, but the point of it is that no, you're not buying this stuff for its face value, and you're buying it for its melt value beyond anything. So no, I don't see that being a problem.
So
Yeah, I mean that's the currency. If that's the case, the currency falls as the currency falls, and it is falling. I mean, and it's falling. It's fallen 9% this year. So that's what President Trump wants, of course, and that's, you look at the Mar-a-Lago Accord. It speaks of a weak dollar. That's what they want. That's what he's getting. But now you're going to run into problems with who wants to take our treasuries in that environment, who wants to take our dollars in that environment for the goods that we sell, or that we buy, rather. So this is the quandary. This is what happens when you mess with Mother Nature the way that we did, and you suppress interest rates for 2+ decades, creating distortions and misallocations in resources and capital, and distortions in asset prices. When things try and find equilibrium with reality, especially in a rising interest rate environment, the biggest shock to all will be the asset prices that regress to the mean. So, this is part of the reason he wants low interest rates and low, a cheap currency to help our exports and whatnot. But, remember, it is because of the reserve status that we have low interest rates, and that we have cheap goods, and that we have high asset prices, because the world has been buying our currency, which makes our currency strong. This is Triffin's dilemma. And you will always have strong currency as the world reserve currency, because there's greater demand for it than we can supply through commerce, just simply people buying our stuff, or vice versa. And so then you end up with a situation where it's so much cheaper to send your manufacturing across the world to the countries that are inexpensively producing it in their their inexpensive currency, that you eviscerate your manufacturing. This is why we have trade imbalances, and it is for that. And is it unfair? I don't know. Is it unfair that there are tariffs by these other countries when we get the benefit of being the world reserve currency, which has enabled us to live high on the hog and have low interest rates and high asset prices and cheap goods? Well, you reverse that, and I agree, we need to bring this stuff home. There's no easy way to do it. We have to, but it'll be a process whereby if it reverses, now you have high interest rates and goods that are more expensive, shelves that are half full, Wall Street that is seeing falling prices, companies that are making layoffs. You don't have the benefit then that we've enjoyed for a very long time. So it's a double-edged sword, and I don't know what the right answer is, but I will tell you that you can tell that he's certainly agitating a good portion of the world with these ideas, and at the same time, we're witnessing in real time how the bond market is just losing demand from the people that have supported our indebtedness and our spending for the last 50 years. This market ultimately, in my mind's eye, will be defined by an inability to readily source product, because it is such a small amount. And if anything happens that would wake people up, the mainstream, in a few hours, everything would be gone. I mean, that's the truth. Eric Sprott and Rick Rule and a couple other people could empty their wallets and buy up the whole industry in an afternoon. As silly as that sounds, they could. I mean, if you had a few $1 billion thrown at the retail market in this country, and then you get to a point you have to wonder at some point, if we see this thing unfold, where gold really starts to move higher and silver really starts to move higher, and at what point do the mints around the world start to rein in their desire to provide Krugerrands and Kangaroos and Philharmonics and Britannias to the United States? Wouldn't it be better to keep it onshore, to become more nationalistic rather than global? And I think that will happen. So yeah, I don't say that to better hurry up and get it now, but I think these are things that I think about all the time. And again, I'm the little boy who cries wolf, but I do believe what I say. I just, have a bad habit of being way early on these things, but I do think they will happen. It's all about math at this point, and the math of where we are just doesn't add up to the rest of the world being keen on holding our dollars or holding our treasuries or continue to fund our our exorbitant lifestyle when we are, here we are, even with Doge, and we're asking to raise the debt ceiling and have another on the horizon $2 trillion deficit. Not a good mix. The states should have the ability to push back on many things, whether it's marijuana or cryptocurrencies or whatever, or CBDCs or gold, using gold as legal tender. I was just talking to Jason Cousins from Glint, and he says to me, Andy, my insiders tell me that Governor DeSantis is going to sign the bill probably on Tuesday. So these are things where, the federal government says, well, you have to use this, but the states have the ability to say, no, we're going to use this, or any of the things that the states choose, from abortion on down. These are things that are the prerogative of the state. And to put something in there and say this cannot be done should alarm everybody. And I think AI is something that should alarm everyone, especially if you have kids, as to where their path is and what they're going to do in the future to make a living.